Good morning. Today's Thursday, August 29th, and what we're looking at here is the daily E-Mini S&P 500 chart. And I just want to show you a couple things I'm looking at right now. All right, this is a 100 exponential, the deep purple on this chart, and this is a 50 exponential moving average. We're trading between the 50 and the 100. All right, so we're getting support here at the 100, right? But let's take it a step further and see where we're at in terms of the overall Fibonacci retracements. But what I want to first do is I want to measure from the low of this year to this old high before we broke out to the new highs. This high here, 1679 3/4, that was put in place on May 22nd. Notice how the market turned precisely on the nose at the 50% retracement from this low to this high, right? And it was pretty much back to that 100, right? Went a little below it, but nailed that 50 and bounced up to make new highs, right? So we want to take a note where the last pullback stopped at the 50. And from this high down to this correction low was roughly about a 7.5% overall market correction, which is normal, okay? Bounced higher. Let's take this further. I'm going to now measure the fib to the new high here. Okay, we're not even near the 40%, right? The 38. But what I want to measure now, okay, is from this low here, this last reactionary low. This is a significant low. There's no doubt about it. So we want to measure from this low to this high. All right. So let's draw the fibs again. Again, I use TradeStation, so you just use the fib tool. Left click on the fib tool, take it to the low. If you're looking for, if you're measuring an uptrend, you take it, put on the low, left click it. Drag it to the high. Look at where we're at. Look at where we hit 2 days ago. 50% retracement of this last swing, right? Again, from this low to this high, 50% right here, right near that 100 exponential. Again, you know, there's three main moving averages that I use, and you see me use them a lot, right? The 50 exponential up in here. You see me often use the 200 as well. But another one I love is 100. Now, all these three moving averages are probably the most widely used moving average in existence, okay? But they work well because of the self-fulfilling prophecy, right? So many people look at them, you get reactions at these points. That's why I like to look at them to see how the market reacts around those levels. So take a look, okay? We're down at the 50 of the last leg up. We're down at the 100 exponential moving average, and we corrected 50% of this last swing. So if you're going to initiate any type of trades in here, your stop loss should definitely be placed below the 1624 3/4 to the downside. But if today sets up, and again, you've heard me talk about these patterns a million times, okay, that inside, if today is not able to penetrate up through yesterday's high, or maybe it matches it, okay, but it doesn't really take it out by much, then tomorrow would set up for a nice potential trade. Okay, so again, look at today's low. Today's low took out. Okay, today's low has not been able to take out yet yesterday's low, so we might be setting up for a nice trade to the upside. Today's high so far is 38 3/4. Yesterday's high is 39 1/4. Okay, so we're setting up for potential, you know, a nice explosive move to the upside. That's what I'm hoping we'll set up. Heck, even if today reverses and takes out yesterday's low, and then is able to, you know, reverse and close in that top quarter, that would leave me for a nice buying opportunity tomorrow as well. Okay, let me take a look quickly at two more markets here. All right, first one, I want to look at Apple. Okay, Apple has cleared right above that 200 right in here, okay? I've got three white lines. You see the horizontal lines on my screen. This one here, this represents this high. Okay, that should act as some type of support on the way back down. Okay, I came real close. I missed it by 2 points yesterday, and we've rallied up considerably, almost 10 points from there. The second level would be this high right here, which represents this level. And then this high right in here. 3 levels broken to the upside should now act as support. Okay, I've got the upper upper band here, the lower and the mid. And look at how the 200 and the 50 exponential are starting to converge. They're starting to come together. So really what I'm trying to say here is anywhere in between these levels, again, Apple, AAPL I'm looking at. I'm looking to buy this market down in this zone. I know it's a big zone, but again, mid to lower band here, and back into these averages. So I will start, if the market is able to break down through 86, I'm going to let you know what I'm looking to do in here. But in this area where I'm circling right here, that's where I'm looking to be a buyer here. Obviously, you're going to obviously want to measure your fibs, take your fibs from this low, measure up to see where you're at, and you'll see that that 38.2% retracement is also at this lower white horizontal line right here. Let's take this off. There's a lot of stuff on here. So right now we've got an average, the average true range of the last 21 days. We've got about 9.5 points. That's what we're seeing here. Let's take a look at gold real quick as well. Gold, I definitely want to be a buyer on a pullback. Okay, I definitely want to be a buyer on a pullback. Gold's had a nice run up, and I've called that since down in here that the market should move higher, a lot higher, and it has. Now we're going to patiently wait for that pullback. Again, upper, mid, lower band, 50 exponential right in here is right in between that mid and the lower. So this is the ETF GLD. If you put on a futures contract, you're going to see the same formation. Looks identical, right? So right in this area. So natural physical gold, you're looking at between 1367 down to 1338. I think we should get a bounce in those levels. So hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye for now.